Well, good morning, everyone. It is 10 o'clock, and we will call the December 11th, 2025 meeting of the Oklahoma City Employee Retirement System to order. Thank you for everyone who showed up. So we have the bare minimum required for a quorum. Item number 2 is from the Vice Chairman of the Board. 2A is a resolution of appreciation for Paul Bronson for his dedicated service on the Oklahoma City Employee Retirement System Board of Trustees, and I'll ask the Secretary to read the resolution.
Whereas the Oklahoma City Employee Retirement System and the Board of Trustees was established by Ordinance Number 8169 in January 1958, and was tasked with administering the retirement fund. And whereas Paul has served the City of Oklahoma City for 38 years and will retire as General Services Director on January 1st, 2026. And whereas Paul was originally appointed by the mayor to serve as a trustee of the Oklahoma City Employee Retirement System in 2006 and has been re-elected 6 times, serving as chairman of the board since July 2015. And whereas Paul has been a conscientious and devoted fiduciary to the Oklahoma City Employee Retirement System, where he has continually championed board and staff development. And whereas during his tenure as a trustee, the assets under the board's stewardship have grown by more than 75%, from $508 million in 2006 to $896 million in 2024. And whereas the number of active pensioners has increased from approximately 1,100 retirees to 1,800 retirees receiving monthly pension payments, all while the plan has remained over 90% funded. And whereas during Paul's tenure as chairman, the retirement office experienced a complete staff transition, including 3 different administrators, and Paul provided essential knowledge, leadership, and continuity throughout these changes. Now therefore be it resolved by the trustees of the Oklahoma City Employee Retirement System that they do hereby recognize and express their appreciation for the outstanding professionalism, dedication, and service of Paul Bronson to the Oklahoma City Employee Retirement System.
We will entertain a motion on this item. Motion and second. We'll go ahead and vote, but then we'll make comments.
I voted yes.
You voted yes? That's good. All right. Motion passes unanimously. Pardon? Yeah. So I'd just like to say, Paul, it's been a blessing to work with you over a long time of your long, distinguished career, 38 years. You've been great to work with, and I always appreciate your frankness and your ability to just tell us what we need to hear at times. And I appreciate your leadership on this board, and always knew we were in good hands with you at the helm. So thank you for your service. I'll even wish the Bills win the championship this year for you, so you can go out with a bang like there. So, but thank you for your service.
Thank you very much.
Chair, if I may, I would just also congratulate you and just thank you for your time over the last almost 6 years that I've had the opportunity to work with you. This is my first trustee board that I've had the opportunity to be part of, and your onboarding, your training, your counsel, and your advice, and just really your mentorship. It really means a lot. I wish you all the best. We are going to miss you deeply.
Thank you. Okay. Well, I appreciate everybody's comments. I've had a great time serving on the board. I feel that we have an extremely important job to do. There's thousands of current employees that count on us. There's, I don't know how many pensioners we have, but we have hundreds of them, if not thousands, that count on us to do a great job. And there's, I mean, this is truly a huge responsibility, and I just want to thank everybody for being willing to serve, and I have no doubt that that great service will continue after I'm gone, and I will not be a stranger. I will show up periodically just to monitor things and say hi to everybody. So thanks again. I appreciate it. Okay, moving right along. Item number 3 is to approve the minutes from the November 13th, 2025 meeting. We have a motion and a second. Please record your vote. Item is approved. Item number 4 is the consent docket. We have several items we can take with one motion. I have a motion and a second. Please record your vote. Item is approved. Item 5 is to ratify approvals. We have one item. We have a motion and a second. Please record your vote. Item is approved. Item 6 is to approve the claims docket. I have a motion and a second. Please record your vote. Item is approved. Item 7 is to approve the following applications for service retirement. We have a motion and a second. Please record your vote. Item is approved. Item 8, receive report of death, authorize payment of the $5,000 death benefit, and authorize secretary to make necessary changes to conform on the following. We have a motion and a second. Please record your vote. Item is approved. Item 9, receive report of death, authorize secretary to make necessary changes to conform on the following. We have a motion and a second. Please record your vote. Item is approved. Item 10, approve the following applications of vested rights. We have a motion and a second. Please record your vote. Item is approved. Item 11 is approve the request of the following to terminate vested rights and commence retirement benefits. We have a motion and a second. Please record your vote. Item is approved. Item 12 is items for individual consideration. 12A is received the Oklahoma City Employee Retirement System Board 2026 regular meeting schedule. I have a motion and a second. Please record your vote. Item is approved. Item 13, receive the investment consultant report. Good morning, Jason.
Good morning, Mr. Chairman. Have to say,
Say that one more time.
going to miss Chairman Bronson and his almost 20 years, which is amazing.
Yeah.
It's been a privilege working with you, and I've enjoyed your leadership as the chairman and just as your insight as a board member. So thank you from
Well, I
myself and
appreciate,
ACG.
again, I appreciate AGC. I mean, we are very blessed to have you folks in your role. And
Thank you.
yeah,
So just bringing forward from the resolution, the end of 2024, now you're actually at over 979 million in assets. Didn't quite make the $1 billion mark, but next chairman will get to celebrate the $1 billion party hopefully soon. As we get toward the end of the calendar year 2025, I'd say it's been certainly an interesting year. Meetings and talking to boards and investors, looking at portfolio results and getting a lot more questions than normal, like why are relative performance we're lagging. And I think it's important to keep in mind that we've got a very long-term time horizon and diversification for a reason, because things don't always just go straight up. So while relative returns from active management and maybe asset allocation, the more diversification you have been lagging a bit, you're certainly well ahead of your required rate of return as markets continue to reach all-time highs. I think small cap, the Russell 2000 just hit an all-time high yesterday, the S&P again, and then the leader this year. If you go to the, I know I can do it. I have the mouse right here. I'm just going to go to oops, can I can't change that. Can you go to the next slide? Yep. We've looked at this quite a bit this year, but I think it's a good reminder. So this chart is basically the asset classes that you're invested in, and it's organized with the best performing asset class on the left and the worst on a year-to-date basis on the right. That said, I mean, even the worst performing asset class this year is still positive. Real estate, it's up 2.2% and really rebounding. We're a lot more constructive on where real estate is going from where it's been. Fixed income is up 7.5% this year, which is above your required rate of return. Emerging markets and non-US leading the way, up almost 30%, followed by large cap and small cap. That said, I think looking at the 3-year and 10-year numbers is really instructive at looking at relative results of the total portfolio. Large cap, the blue bar is the trailing 3 years. And this is really coming out of not just COVID, but the post-COVID where we saw rates rise in 2022 and then the subsequent 3 years where we've really seen large cap outperforming everything. You look at the 10-year number and large cap is outperformed, but the degree of outperformance for large cap over that 3-year period is pretty dramatic, up 20.5%. When you look at US small cap, up 11.4%. If we were sitting here 3 years ago and we said you're going to get 11.5% from small cap, we would have all said that's a fantastic rate of return, but it's half of the return of large cap. And I'm just pointing that out because as we look at overall portfolio construction from an asset allocation standpoint, you have, we'll call it 45% of your, 40% of your portfolio is in predominantly US equities. That's a 15% target to US large cap, a 10% target to US small cap public markets, and then a 15% target to private equity. Most of the private equity is US-based investments. And I think it's, as we look at private markets and how that private markets have influenced public markets, and particularly small cap, we really need to look at those two allocations kind of in tandem. So it's about 30% of the overall portfolio is in, or 25% is in small cap and private markets. Your policy benchmark, 30% S&P 500, we've talked about, you're not necessarily matching that with how you're investing because of diversification. So on a relative basis, having not as much of that large cap has been a bit of an impact. Within small cap, and I think the next two slides are it's fairly interesting what we've seen happening in the market. If you go to the next one. This is looking at the Russell 2000, or the small cap universe. The Russell 2000 is essentially the Russell indices takes the 3,000 largest stocks in the US, and so that's the US market. The 1,000 largest companies are large cap, the Russell 1000, which is pretty comparable to the S&P 500. Obviously there's more names, so it goes down a little bit further. And then the Russell 2000 the next 2,000 largest companies make up small cap. If we looked at that on a weighted basis, the top 1,000 companies make up today, because large cap has done so well, about 92.5 to 93% of that U.S. equity market. The 2,000 smallest companies make up about anywhere from 5 to 8%, so much smaller weighting. Within those 2,000 companies, what we've seen over the last really 2 or 3 decades is an erosion of the quality of that benchmark. What this chart is showing is going back in 1995, 84% of the companies in the Russell 2000 index had positive earnings, and 16% were what were considered non-earners, or just newer, more speculative companies that were just coming into the market. Over the last 3 decades, we've seen a pretty significant erosion in the quality of that index. As of the end of last year, 56% of the companies in the Russell 2000 had positive earnings, 44% were non-earners. So what's going on? A couple things. Private equity has become a larger portion of the market. Companies are staying private longer. It used to be, there's a term in private equity, they call them unicorns. A unicorn was a private company that went public at $1 billion or more. I think the stat I just saw is there's over 50 private companies today that have a valuation over $50 billion. So when they come public, they're not coming public as small cap companies, they're coming public as mid or large cap companies. So those the higher quality companies that used to be in the small cap market, staying private for longer and going public as large cap companies. So this has been challenging in the near term for active managers. If you go to the next slide, this is looking at the impact, what's driven index returns over the last 6 months versus what has been what drives small cap. And really this isn't just small cap, this is all markets over time. You would expect factors related to quality of earnings to be more impactful over the long term. That top chart is showing what drove small cap returns in the last 6 months, what types of qualities. The best performing companies, look, that first bar, highly shorted. These are companies that are being shorted by investors, thinking that their valuation is too high and is going to come down. Those performed the best performing. The next best characteristic was being unprofitable, followed by higher volatility, low price, higher beta, short interest, which is tied to being highly shorted. Factors that weren't rewarded, that actually were negative returns, were profitability, low valuation, return on invested capital, things that you would think would be valuable over time. So that's made it pretty challenging in the short term for it's really small cap, but active managers overall. This has played out. What we would expect to see is on the bottom, and this is over history. So if we look at all 6-month periods going back 3 decades, those characteristics that generally are rewarded the most, it's the complete opposite. So this is somewhat of an anomaly. This is why I started by saying, you're on a relative basis, while you may be trailing, it's because you're implementing a couple things: diversification, sound risk reduction, and active management, not just following the herd where that's going and following the momentum. But that's had a little bit of an impact on relative returns, if you will. So if we just go to the next slide. From an asset allocation standpoint, I touched on this. We're pretty much in line with targets, but you see there on the top within equities, we're a little bit overweight to large cap because that has done well. Also because that's the underweight to private equity. As you've increased your private equity allocation from 10 to 15%, that's being housed in large cap, which is until that capital is called. pretty much in line with your fixed income target. If we add in the cash, you're right at the target and a little bit underweight to real estate. Looking at the component parts, next page of what's driven return. So the very top of the page, the trailing 1 year, as I said, from an absolute basis, double-digit return, so well above your 7% required return. Net of fees, you're at 10.25%. But relative to the policy index, 11.8%. And you'll see there, small cap, while your small cap has actually done okay relative to the benchmark, the difference between small cap returns and large cap returns in the 1 year is 12%. So on a weighted basis, a bigger part of your total portfolio policy index is in the S&P 500, and you're doing some different things. We add to that private equity. Your private equity has done fairly well. It's produced 10% return over the last year, but that's not the 15% that you've gotten from large cap. And on a 3-year basis, it's even more pronounced. I would say, as we look at things, we've been coming in with our valuation red light, green light chart saying large cap has been overvalued for some time. And this will continue to be reflected in our capital market assumptions. At the beginning of the year, we'll revisit asset allocation and capital market assumptions. It is a long-term view, but much like we look at what our peers do, our expectation for large cap is going to continue to be, on a go-forward basis, a little bit below small cap, international, and private markets, just because valuations are high. I would anticipate that across the board, forward-looking capital market assumptions will come down a little bit, but nonetheless, that's what we're seeing here. Your international managers, keeping up, I'd say, up 21%. Really what's kind of hurt in the EM space, similar thing is small cap. You have Wasatch as an emerging market small cap manager. Smaller cap stocks, not just in developed but in emerging, have lagged a bit. And the real thing that's hurt it's a small allocation, 5% total, and the emerging market small cap is 1.5%. The best performing country within emerging markets was China. China's up over 30% on a trailing 1 year. There's not a lot of representation in the EM small cap world of China. It's more India. And so the Wasatch strategy pretty significantly underweight China. That has benefited you at times. Right now, on a relative basis, it's a bit of a headwind. So that's, as you look down that 1 year column and we see double-digit returns from pretty much everything, and even fixed income, 7% returns, we're not uncomfortable with managers and relative performance. I think it's just important to keep in mind the benefits of diversification. On an absolute basis, you're tracking well above targets, and as we see things start to perhaps get a little bit more challenging from a valuation standpoint, and we've seen a bit of that over the last couple of months where there's a spreading out of market returns. We're comfortable with where the portfolio stands today in terms of diversification and downside protection. Yep.
With the international and emerging markets, how much of that return is attributed to just the weakening dollar? And then with U.S. large caps being so overvalued, what happens to international markets if there is a correction and we still have a weakened dollar? Does that make...
Well, certainly the weakening dollar has been a benefit this year. It's about 10% of the return on a year-to-date basis. So if we look back prior to this year, if we look back a decade, that was a bit of a headwind.
Yeah.
Where your returns for non-U.S. markets were in the mid-single digits. The actual returns of the companies, the EM and international companies, were comparable to U.S., but the currency was a headwind. This year, it's added about 10%. So that, that's going to tell you that for international, the company level return is about 15%. So it's still good return, and currency's adding another 10%.
So if I know it's hard to predict the future, but as you're rebalancing portfolios, you're not necessarily getting out of any specific asset class, but just changing the allocations. If you're expecting a correction in the U.S. large caps, do you shy away from large caps, or do you?
Sri,
lean
because
more
our
into-
view, and for the investors we work with, like pension funds like this, because the time horizon is so long-term, I would not anticipate major shifts to target allocations as a result of where we are today.
Yeah.
What I will say is the expected return overall for the portfolio is probably going to come down a little bit from where it was last year, just because valuations are higher. The relative expected return for large cap, small cap, and international should stay about the same, meaning in our capital market assumption, small cap, international, private equity have a little bit of a premium return to large cap at all times. We haven't seen that happen the last decade, but that will continue to be the case.
Okay. Thank you.
Any additional questions for Jason? Okay, hearing none, Chair will entertain a motion to receive the monthly investment
Thank you.
report. Have a motion and a second. Please record your vote. Item is approved. Item number 14 is to elect a chair for the term of January 1, 2026 to December 31st, 2026.
I'd like to make the motion to elect Amy Madera as the chair.
I'll second that. You got to get me on there. Now we have a motion and a second. All in favor? Please record your vote. Item is approved. Amy, thank you.
Thank you. I've got big shoes to fill, literally and figuratively.
Literally and figuratively. Okay. Item number 15 is to elect a vice chair for the term of January 1st, 2026 to December 31st, 2026. I'd like to nominate Joanna McSpadden.
I second.
We have a motion and a second. Please record your vote. Item is approved. She will not be too happy of me nominating her in absentia, but that's what happens. You don't show up, you get nominated. Yeah. Okay, final item is item number 16, comments from board, staff, and citizens. Again, I just want to say thank you to everybody. It has truly been a pleasure. And I'll drop in from time to time, not every month, but here and there, so.
Or you kind of come to the meetings?
Yeah, absolutely. Yeah. I got to keep an eye on you.
I would say all of this pleasure working with you. Out of all the directors and superintendents I had to work with, I tell you now, you was the only one that kind of intimidated me a little bit. But I let you know that now since you're gone.
Well, not intentional by any means, so. But thank you, Bruce.
All right.
Okay, we are adjourned at 10:30. Thank you, everyone.